All right, welcome to The Explainer. Today we're digging into the latest numbers from Elite Pharmaceuticals, and let me tell you, they just posted some absolutely mind-blowing results. But, as you're about to see, the headline figures hide a really fascinating story. And that story really boils down to this one central question. It's a total head-scratcher, right? How in the world does a company more than double its revenue in just one quarter and still end up telling investors it lost money? It sounds kind of crazy, but that's exactly what happened. Let's break it all down. So, first things first, let's talk about the good news. And wow, is it good. The first quarter of their fiscal year 2026 was honestly just an explosive and record-shattering time for the company. Check this out. They pulled in a massive $40.2 million in revenue. And to give you some perspective on that, what they made in this single quarter is almost half of what they made in the entire last fiscal year. Just incredible. So what does that $40 million mean in terms of growth? It means their sales more than doubled compared to this same time last year. That's a 114% jump. That's just wild. And it's not just about sales. The profit from their actual core business operations, an incredible $21.7 million. And get this, the profit from this one quarter was higher than the profit from the entire previous year. I mean, operationally, this company is absolutely crushing it. Okay, so if the business is just printing cash like this from its main operations, how on earth does it end up with a loss on the books? Well, this is where we get to solve the big puzzle. It's all about the difference between real-world profit and, a paper loss. Which brings us right back to our central mystery. With such a profitable quarter from the actual business, why did they report a net loss of 1 cent per share? Well, it all comes down to two very specific and kind of weird accounting items. And here are our culprits. The two things that turned that huge operating profit into a tiny net loss. You've got this nearly $22 million thing called a non-cash warrant expense, and then a $5.3 million tax expense. Now, the really important thing to get here is that neither of these has anything to do with their actual day-to-day business of making and selling drugs. Let's tackle that big one, the non-cash expense. This is one of those quirky accounting rules, part of what they call GAAP. So because Elite's stock price went through the roof this quarter, it shot up 67%, the paper value of some other things they have, called warrants, also shot up. The accounting rules say the company has to record that increased value as an expense. But here's the key. No cash actually left the building. It's purely an entry on a spreadsheet. It's a paper loss, not a cash problem. So with that accounting weirdness out of the way, let's get back to the real story. What is actually fueling this insane growth? What's the engine driving these record sales? Well, it all comes down to their powerhouse position in the ADHD drug market. This growth is really coming from two main places. First, you've got their established elite label portfolio, and the star of that show is their generic version of Adderall. And second, the real game changer has been the blockbuster launch of Lisdexamfetamine. We'll just call it Lisdex, which is the generic for the super popular drug Vyvanse. That new drug was a monster for them this quarter. And this really gives you a clear picture of their position. They've carved out a huge slice of the pie. For the brand new Lisdex market, they've already grabbed about 8%. And for the main generic Adderall market, they are a powerhouse with a commanding 18 to 20% share. Even the extended release version, they've got 11%. So yeah, they're a very big deal in this space. All right, record growth? Check. We figured out the weird paper loss? Check. But there's always a but, right? Every great story has a catch, and this one is no different. Let's look at the other side of the coin, a very clear warning from management about profitability. This quarter, the company's gross margin was an insane 68%. Now, what that means is for every single dollar they made in sales, they kept 68 cents after paying for the product itself. That's a fantastic number in any industry, but for generic drugs, it's almost unheard of. But management was not celebrating too hard. They got on their earnings call and were super blunt about it. They said, and I'm quoting here,
it will be difficult to maintain the level of the percentage achieved. I mean, you really can't get much clearer than that. They're telling everyone, hey, enjoy the 60% because it is not sticking around.
So why the warning? Why are they so sure those amazing profits are going to come back down to earth? Well, it's a classic story in 3 parts. First, fierce competition. We're talking more than 10 suppliers are now in the Lisdex market. Second, all that competition creates intense price pressure, which drives prices down for everybody. And third, as Elite gets bigger, they're selling more through giant national wholesalers. You move more product that way, for sure, but you make less money on each pill.
And all of this, it brings us to the future. The company is now flush with cash from its operations, the business is booming, and they are standing at a major strategic crossroads. They have a huge decision to make about their next big move.
And it really boils down to these 2 paths forward. Path A, which they said is their preferred idea, is to go on a shopping spree, use their newfound strength to pursue mergers and acquisitions, buy other companies or products. Path B is the backup plan. If a good M&A deal doesn't come together, they'll move their stock listing up from the smaller over-the-counter market to the big leagues, the NASDAQ exchange.
And they're not just kicking the can down the road either. Management has put a pretty firm timeline on this decision. They've given their M&A team until the end of 2025 to show some serious progress. If a deal isn't taking shape by then, they're going to pivot in the first quarter of 2026 and start all the prep work for that NASDAQ uplisting.
So let's quickly recap the key takeaways here. 1, we saw record-breaking growth, all fueled by those key ADHD drugs. 2, we learned that reported loss was just accounting smoke and mirrors, not a reflection of a weak business. 3, we know those impressive 68% margins aren't sustainable because competition is getting fierce. And finally, 4, a major strategic decision is on the horizon. Either buy another company or move up to the NASDAQ. Which leaves us with the final forward-looking question. With a super strong balance sheet and a business that's expanding like crazy, what is the right path for Elite Pharmaceuticals? Will they find the right company to acquire, or will an uplisting to the big leagues be the move that really unlocks value for shareholders? We are definitely going to be watching to find out.